Hello traders, hello everyone. Welcome to our new webinar. Can you hear my voice? Can you see my charts? Please let me know in our chat boxes. Hello from Belgium. Hey Bit, how are you? The Bitcoin. Kate, hey. Okay, perfect. Juan is here as well. All out and clear, perfect. So we have quite an interesting markets for the last few days, huh? Let me take this jacket off. Okay, Amit is here. So someone is watching on YouTube, someone on TradingView. Everything works well. So let me know in the comments, where are you coming from? I know that Pete, you are from Belgium. What about listeners on YouTube? So we will start in a minute or so. UK. All over the world. Hey Sasha, hey Nick. Actually, I will, maybe at the end, if I will have time, I will look at the euro pound. No problem, okay? So, what's going on? I'm sure that all of you know what this is all about. Firstly, we just try to sum up a few things. Then you know that last week we had Powell, who was somehow hawkish, but then this Silicon Valley Bank collapse actually made things a little bit tricky. Okay, so now when we have these financial markets coming to the downside, well, I think that Fed cannot be that hawkish anymore. Some even thinks that not that 50 basis point is out of the table. Some even thinks that they should be no rate hike. ECB, there are speculations for the ECB this Thursday that there is 50 basis points probably also out of the table. So this means that of course Fed central banks are worried for potential more weakness on these markets, because we know that financial sectors could potentially pull down the other markets as well. So that's the biggest concern for now. And if you look here, I have this Swiss bank, Silicon Valley Bank. You can clearly see that there was a massive breakdown, and you can see that now equal weighted financial ETFs is also coming to the downside, and I'm afraid that the S&P 500 could do the same. Okay, so not only that, tomorrow we have the inflation numbers. And now imagine if inflation will be even higher, what the Fed will do. The Fed, I mean, they will not be able to be that aggressive anymore, and because of this crisis on financials, on banks. So it will be, Powell somehow will be trapped. And in my opinion, in these uncertain times, stocks could actually see much more weakness, and you will see that investors, traders will look for safe havens such as gold and maybe even Japanese yen, which has been doing very, very well. Okay, so we'll see if these banks will somehow try to stabilize. Then this could be positive for stocks, because if stock market in general will, or banks will try to stabilize, and then Fed will still not be hawkish anymore, obviously, because he wants to be careful when looking forward, then I think that this could be quite interesting for stocks to recover. But we are not there yet. I mean, this story will unfold through the whole week, actually, so it should cause some interesting price action. And I'm afraid that maybe the S&P 500 could potentially see 3,800, maybe even lower, and then let's see if we can stabilize down there by the end of the week. Now, when it comes to trading, it's very important to know what to look for in this kind of environment. Now, here I have only dollar index. You can clearly see that there is a very nice move to the downside. You can see that here, this is actually a move down from, let me go back a little bit. That's from Tuesday, okay, when Powell was, and Wednesday, when Powell turned hawkish on its testimony, okay? And dollar actually turned to the downside. And the reason is obviously the US yields. You can see in red, very strong move to the downside. But US dollar index in general is not that bearish, it's actually neutral, okay? And if you look now also and add this to this, the S&P 500 in green, you can clearly see that dollar is neutral because it's trapped between lower US yields and lower stocks. Now, normally lower stocks would make dollar bullish, okay, but lower yields will make dollar bearish. So now this dollar is not really a safe haven. Now, if you look here at Japanese yen, you can clearly see it has seen a very nice recovery here. I'm looking at the yen basket. We have 3.6% rally since last week, okay? Also, if we look at gold here, you can also see a very nice bounce on gold. We are up here 4.5% since last week. So you can clearly see where the flows are and what could be actually very interesting option for potential pullbacks later this year, later this week. However, we have the inflation numbers tomorrow, so maybe things will slow down a little bit, and then I think that tomorrow it could be quite a volatile day, okay? But what we see now, I mean, I think that US yields potentially are headed even lower. At some point, US dollar index will most likely follow to the downside as well. So, so I think that Japanese yen has more upside, especially on crosses. We have seen some very nice, interesting reversals last week. If we take a look firstly on the 10-year US notes, you can clearly see that there was a very nice reversal from that lows, and there was a deep pullback, quite sharp, but we were able to stop this 78.6 to 61.8% FIB. Okay, now more importantly, we are seeing a very aggressive move to the upside. So even if this is going to be at some point only a free wave recovery in ABC, well, keep in mind that there is still room for much more upside, because you can see that wave C actually, firstly, it should take out the previous wave A high and then rally even further. However, wave 4 can sometimes rally back to the area of a former wave 4, which is here. So if this is going to be the case, then we know that US yields has more downside potential, and it means that dollar index sooner or later could stop at the resistance. But you have to be careful when looking at the dollar index, because it's not equally weighted. You know that we have on Thursday, we have the ECB decision. So if ECB will not be hawkish, if they will say that because of this, some kind of maybe recession, potential recession coming or whatever, then obviously this could stop the euro from rise too much, and this could potentially have an impact on dollar index, obviously. So you really have to, you really need to have the full picture. When you're looking at the dollar, look at some equal weighted index rather than just dollar index, okay? Also, looking here at now this is very interesting. Firstly, TLT, you know that this one tracks longer term bonds, 20-year, and so far we are seeing the very nice perfect reversal. So longer term bonds, it seems that there can be headed to the upside. Short term bonds and yields, obviously they are more sensitive. And what I really like, or what is interesting, is that if you look here at this 2-year, it moved very sharply to the upside last week and then reversed to the downside. So even this one, has been one of the strongest, only the 2-year reached a new high, if I'm not wrong. Even this one is now turning to the downside. So it looks like that US yields are headed lower. Investors, speculators really believe that Fed will sooner or later have to stop what has been doing till now, because if they will keep hiking rates, obviously financial conditions will even worsen, and situations like we have with Silicon Valley Bank may not be then the only one. Okay, so that's for the US Treasuries. And also, not only that, we have bunds here as well. Notice that we are coming higher from the lower side of the wedge. I've been tracking this one, not really breaking out yet, but I just think that we will see sooner or later much higher prices, maybe still into wave 4. Firstly, watch out for potential trendline retest here, and then potentially even we will see a breakout. So this is, if you're familiar with the Elliott wave principle, this is a very significant reversal pattern. Okay, and normally when it's completed, you see unexpected, very strong move in the opposite direction, and market will try to erase some of the previous strong bearish trend, obviously. And since we have only one leg to the upside, we know that this is only, even if again it's going to be just a correction, this is going to be only wave A. Wave B and wave C should see more upside. So when I look at the whole picture, I just think that US yields really are potentially either going to stay sideways, but most likely going to move even lower. Okay, now let's take a look on the euro dollar. So as I said earlier, euro dollar is a little bit tricky because of the ECB decision on Thursday. Now on Friday, it was almost certain that they will do the 50 basis point. Okay, but now when this is all a little bit tricky and challenging, well, maybe they will be a little bit more careful here. So watch out for potential resistance here on euro dollar. I still think that this is a wave B rally. I'm not really sure if wave B can be a flat, maybe can be more complex. If you look here at the alt count, okay, maybe we'll still see a 3 waves up. So in either case, I think that resistance is not that far away. 107 is the first one, and then you have this 108. 108 was the latest US CPI report back in February 14. Okay, so clearly, since then you can see that there was a downtrend in euro. So obviously there were some important order flows activated, triggered before the market sold off. So I see this as a potential very important resistance if we can see a retest of this level. Okay, so euro dollar short term, maybe yes, could see a little bit of more upside on the next dips, but overall, because of the ECB, I really think that we should be aware of potential resistance. Also, if I try to hide a little bit this, you can actually see that this could be left shoulder, head, and now maybe even right shoulder. Okay, so this is also something that we should consider. Okay, now let's take a look also. Let me look at my notes here. Let me look at dollar yen. Okay, so dollar yen, as I said earlier, lower stocks, lower yields, ideal scenario for yen crosses to see much more weakness. Okay, so dollar yen obviously is driving other crosses as well. And if you were in our webinar last week, then you know that we've been tracking this potential resistance here, where this recovery is equal to this one from the previous bull trend from that wave 4, and this could be actually right shoulder of the bearish head and shoulders pattern. So far we are seeing a very aggressive sell-off, and if stocks will stay in risk-off mode, Japanese yen could even strengthen, okay, especially because of what the US yields are doing. And then obviously you have plenty of speculators that Bank of Japan will remove yield curve control this year, and this is another indication why Japanese yen could be a real mover this year. Also, maybe this will happen after April, when you have new governor from in Bank of Japan actually. So generally speaking, I think that we could be headed lower for a wave C, maybe even wave 3. But I know that sometimes it's not easy, or can be very tricky to say when this top is in place. So I have 2 wave counts here, and so far I really like what I see. Firstly, if you look here, we can clearly count on hourly 5 waves to the downside. Okay, I would probably label this one like that. Okay, so you have 5 waves down, and we know that if we have 5 waves down, even if it's just temporary top in place here, we should see more weakness after the next rally. I'm not sure if this rally will occur from current levels, but the idea is to expect more weakness whenever this ABC legs will show up. So where's the resistance? Well, resistance is at the previous wave 4, obviously, that should be right there, 134.70, and then you have also a little bit higher, you have this previous swing lows that can become very nice potential resistance after this next bounce, if we will see bounce. Okay, I will be watching this one very closely, because I think that we have a very beautiful sell-off so far, and even if I'm more careful here and looking for the bullish count, well, even if I think that this could be some kind of a wave 4, what would you expect? Well, that even wave 4 would be made by 3 waves, right? So far, we have only 1 leg to the downside. But notice that we are trading very close to this potential invalidation level of a bullish count. So yes, I'm bearish on dollar yen, but as you can see here, I still trying to observe potential bullish looks to make sure that I'm ready if something goes wrong, or to see if I can be bearish, at least short term, even with a bullish count. And that certainly is the case, because as I said, wave 4 should be made by minimum 3 waves, and that's only wave A. Wave B, so wave C to the downside should come, but when this will happen, probably we will already have an overlap with 131.60, and this would then be just another confirmation that most likely dollar yen is headed south. Okay, also let's take a look on CAD yen. We talked about CAD yen as well in the past webinars. Euro view and euro dollar, please. Okay, I'm not sure if that was right now or earlier, but obviously we covered it. So if anyone is interested in this whole presentation, of course, we will have this recording available. And now also, as I said, let's take a look on CAD yen. So CAD yen, in our past webinars, we highlighted a very clear Elliott wave pattern. We have seen a very nice and strong sell-off here since November, October of 2022. Clearly, that was a very strong impulse. So we know that when we have a strong impulse, usually that's a wave 3. So after a wave 3, you would expect wave 4 that can retrace for 38.2%. This was around 100 level. You can see right here, there's a 38. Okay, and also wave 4 was equal to wave 2. So usually when you have wave 3 extended, you can look for distance of wave 2, especially if it was deep like this one, and compare it to wave 4. Normally this could be a very interesting area, especially if you have both projections coming into a very similar zone here around 100. Also, as I said, psychological level as well. So far we are seeing a very nice strong sell-off. Dollar yen is bearish. You have crude oil coming significantly to the downside. We've been talking crude oil bearish view as well last week, and so far it looks like that there's nothing in favor of Canadian dollar at this point. Also, you have Bank of Canada on hold, and with this, what is happening in the US, obviously, I really think that they will not change their views. So I think that this pair will remain bearish. Could see more weakness, of course. There could be some choppy price action going forward. Nothing moves in straight line. If we see suddenly a rally, let's say from the recent swing lows, which could be the case because we have quite a volatile Asian and European session. So now in the US session, things could calm down a little bit. Keep in mind that there will be very rarely that market will move just in one straight direction from 1 minute open to the daily close. Okay, you will see ups and downs between the intraday. So keep in mind that there can be some stabilization now going on. Maybe they will try to calm down the markets a little bit during the US hours, and you will see now a free wave recovery. So clearly a resistance again at the previous wave 4. I will use this one, which is here around 98.10. And then if we go a little bit higher, then this base channel obviously should cap the upside. But when I look at the whole picture here, keep in mind that we also move deeply into this wave B. We talked about this confirmation bearish level here around 97.85 as a very important one, because clearly this overlap confirms that the recovery was in free waves. And if you again just try to ignore the wave structure here and just focus on the personality, you can clearly see that there were plenty of swings within this recovery, while we have a very sharp move down in just a few days. Okay, so clearly that's directional move, looks like an impulse, but the previous rise should then be treated as a correction. Okay, so since I mentioned crude oil, let's take a look what is happening at this minute. So last week we said that 80.81 is important resistance because we were looking for this triangle here. So far we have seen a very nice sell-off. That was what? Almost 10%. Not really forming a breakdown here. Again, it's Monday. As I said earlier, it was a very volatile European session. Things will try to slow down a little bit. So maybe they're still going to see more weakness. Daily close, obviously, below this trend line is needed to make sure that we are in a fifth wave. Keep in mind that even this wave E could become a little bit more complex. So if we suddenly rally, let's say back towards 77, 78, I think that's still very important resistance. These were the two swing highs that goes back from last week, even from today. Or it was today? Yeah, today was around what? $77 around there. So clearly that's the next important resistance on a free wave rally. Okay. If we look at the big picture, clearly consolidation, a reversal mode from last year highs. So I think that we could be attacking this year around $62 per barrel. Okay. Let me look at what we have. Cable. Yeah, cable looks very interesting. Okay, so if there is any currency besides Japanese yen, of course, that looks very attractive, at least from trading perspective on how things finished last week, is probably pound. Okay, why? Because you can clearly see that not this one. I have to open this chart. You can clearly see that we had a very nice reversal from that lows. It was similar, if not almost the same reaction like we have seen here at the highs. And I think we talked about this last week. Okay, so we weren't actually see any kind of a progression to the downside. It was just a failure breakdown that bring in very nice and strong impulse. So far, not only that we reversed from that lows, okay, we are already seeing these prices trading above that upper line of this downward channel. So clearly that looks like a bullish turn, and I would be looking for much more upside, but think that this wave, two wave B pullback maybe could occur. So watch out for 1.2 to be a very important level. It's again round figure psychological level. Okay, now also notice that there were plenty of overlaps and fights between bulls and bears here around 1.2 level. So clearly, since bears couldn't hold in play, couldn't stay in play, actually they were already reversed at the end of last week, and pound was one of the strongest. That's why I think that this pair could see potentially even much more upside here, even if again this would be only a free wave recovery. Why I'm always repeating only a free wave recovery, because if you're looking for potential trading plan, then you should look for risk reward setup based on minimum expectations. Of course, if markets will move, if you're trading wave C and then suddenly this appears to be wave 3 when you will get more price data, then that's even better. But it's very important just to try to be more short-term oriented and not be looking too far into the future, or maybe not trying to predict two big moves. Okay, so at least in the short term, I think that we will see these three waves of recovery. Opportunity obviously could occur after this wave B setback. Now sometimes I compare the pullbacks, the length of the corrections, I should say, because each market has its own personality. And if we look here, that was a bounce of 165 pips. Okay, then we had another rally, 130 pips. This was a little bit more extended, but then we had another choppy price action here between or around 200 pips. So something similar, who knows, could occur here now if we are turning around, could occur here. So 150 pips, 200 pips pullback would not be surprised. Of course, we don't know yet where this wave A will finish. Ideally, it will here because we are clearly at some resistance levels when you look back to February 28 swing highs. So I will measure and I will try to project to end of a wave B when we will see some more bearish price action. But clearly, I will pay close attention to this one whenever we get this pullback, okay, for potential longs. Now let's take a look also on the S&P 500. Okay, so on the S&P 500, what we let me move this one to not confuse you. Okay, so what I've been repeating is that I was actually focused over the last few months. I was focused on this VIX known as a fear index. Okay, and I said that if you're at the lower side of the range, just keep in mind that market is just maybe too optimistic about potential further rise, and then most likely the opposite will occur. So if there is no fear, just keep in mind that there can be fear behind the corner, okay, around the corner. Now we have the opposite here. We have fear picking up, and now we are trying to move, not really there yet, into this upper side of this extreme fear when looking at the 2022 levels. Okay, so whenever we are going to move into this area, the S&P 500 could be close to support. I'm looking at the first level at 3,800 to be 30, actually it's a little bit lower, 20 points lower, as a first important level. I'm sure that with this bank crisis in the US, I'm sure that if we break or even just touch for just a few minutes this level here and goes back to December, I'm sure that there will be a lot of even more pessimism out there, okay? And that's when we should be very careful if maybe we'll get any kind of bullish reversal signals, okay? So that's the first support. Of course, I will not be looking to any aggressive longs here at that level. Maybe I should, I don't know, but I'm always just try to be a little bit more careful here. So if you will see a response from that level on the intraday charts in 5 waves, then this could be quite interesting indication that maybe we are trying to form a low here, higher swing low with a failure breakdown below this 3700, 3800. Okay, so I think that this could be quite interesting first level of potential support if we are just going to see, because the daily close price obviously is very important. If you are just going to see straight move to the downside and a daily close here, okay, then obviously we will have to respect what the market is doing and just be aware of more weakness. But even this one, this bearish look at some point should potentially stop then, because I'm tracking WXY correction here. So then the support would be obviously below this 2022 low. So if you're maybe looking to some longer term, obviously if we see a break below 2022 levels, I think that this will be there will be plenty of opportunities on that market. But of course I know that it's hard to get in when market is selling off significantly, okay? Okay, so that's for the S&P 500. There we have also Dow Jones. We are currently testing these key support levels. Again, last week we were looking at this spike in volume here. When it goes back to November, we touched it. We are now trying to reverse higher. So if we can hold the gains and trying to form a low here by the end of the week, then I think that this could be quite attractive for more upside, in my opinion. Clearly, the previous rise here can be counted in 5 waves, and this can be counted in a corrective fashion. Okay. Now let's take a look on what we have. Let's take a look on gold. As I said earlier, gold is acting as a safe haven because of the lower US yields and also lower stocks, of course. If you look here at this chart, we found the support here at this swing high from August, summer 2022. Now we are aggressively turning to the upside. Not really sure if I should trust this move that we really completed this wave 2, since the recovery is in 3 waves. Could be easily wave B here. We are at the 61.8%, so not really sure you want to buy this. But if we see a little bit of more gains, then I will observe the quality of the next pullback. If the next pullback would then be a corrective, then I would look this as a correction within uptrend. But if in the next, let's say, day or two, we will immediately see a reversal of these current gains and we will erase them, then obviously we will know that we are most likely going to attack once more this 1800 area. But the big picture still very clear, in my opinion. That's a wave 4, flat correction appears completed. You have seen a very nice bounce. So sometime this year, I think that we will be trading higher. Now let's take a look. Bitcoin, Ethereum. Some very nice reaction here. Firstly, big chart. You can clearly see 5 waves up. We've been looking for this 5 wave up to be either as a part of a new bullish cycle, or maybe even as a part of a wave C of a flat correction. But what is very important now is that this latest drop, okay, appears to be like a corrective down to 20,000. Okay, so because this was corrective, ABC flat is invalidated. So I think that we are actually going higher, which makes sense because you can see here the dollar index is at the bottom. And as you know, I'm looking on dollar yen and euro dollar, on all of them. I think that we are in a corrective phases from January levels. Okay, so I think that if dollar index, whenever dollar index is going to see much more weakness to resume the downtrend that, in my opinion, has started back in 2022, that's the bullish scenario for Bitcoin in general. So I think that more upside here could be seen. 25,000, my opinion, could be broken. If we look at the 4-hour chart to give you some short-term perspective, we are breaking this ABC correction. I know that now if you're trying to jump in, well, I certainly think that it's much better to wait on some short-term pullbacks and then act. Keep in mind that here, when looking at the 1-hour chart, we have potentially 5 waves up. Okay, so again, buying here, it's quite risky. Keep in mind that even if this is a short-term chart, well, Elliott waves are fractal, and you will see 5 waves patterns on higher degree scale, on a smaller degree scale. So sentiment is also moving into the extreme in the intraday basis, same is on a long-term basis. Okay, so looking at the intradays, since we have very nice and extended move to the upside since Asian session, we had like 14%. Okay, so clearly there can be some pullbacks in the next percentage, like maybe even 5% or so. So keep in mind that the next pullback could be very attractive, while the market obviously is trading above that level. So that's now the new invalidation level, because we have these 5 waves up. So as long as the market is holding these lows, I think there can be more gains. Can be straight from here, but if you're not in, obviously I think it's better option to wait on a pullback. Pullbacks can go back into the area of a former wave 4, so clearly the first support 22,000 around there. Okay, that's definitely the interesting area. Now let's take a look on the Ethereum. This one also, let me clean this. Okay, recent drop stopped at the 50% retracement of this very nice impulse, in my opinion. So more gains could be seen, because you can clearly count corrective subdivisions down to from that August highs to these November lows. So I think that's a correction that we will see more upside. More importantly, on the 4-hour, not hourly chart, again, similar like Bitcoin, we have 5 waves up. Here we have some resistance coming in, which is also marked as a bullish level, because obviously we will see this wave be broken, then we know that new trend has begun. And again, this could represent potential resistance on dips, the support former wave 4, obviously 1,570, 600 around there. And then you have also, more importantly, you have here this previous, where you noticed a lot of bulls and bears fight here below that level, 1600. We broke through, we hold as a support, so next dip in 3 waves again, I think would be quite attractive and very interesting. So cryptos, in my opinion, looks very nice, and I'm quite amazed how good they are holding up, considering what's going on. Okay, so if you are interested in cryptos, make sure to wait on the next pullbacks. Okay, but you will have to be probably very nimble. Someone is asking me for euro pound. I think that someone asked for the euro pound earlier. Euro pound. Okay, let's take a look. Thank you, man. Enjoy your day. Okay, so euro pound. Okay. So, as you know, in the UK there are plenty of issues, and the UK Bank of England was one of the first that highlighted this recession risk. So clearly they were not fan of any kind of hawkish policy, but their inflation is still high. But if this recession really could be coming, then each central bank is in the same situation. No one will be hawkish, okay? But there were still speculations that ECB is much more hawkish than Bank of England. That's why we have recently seen swing to the upside on the euro pound. Looking here at this cycle analysis, okay, you can clearly see that we are here in a recovery if we respect this cycle going back from 2016. So we are in a recovery, but looks like that we are approaching some cycle resistance. Okay, so I'm just aware that maybe this choppy, nasty price action, looking at this big time frame, may not be over just yet. From an Elliott wave perspective, I'm seeing this one in a very complex wave B, where we had this. Now this is a very tricky stuff if you are not familiar with the Elliott waves, but because sometimes Elliott wave pattern can be very simple one, sometimes can be complex one. There can be combination, and you can see here that firstly I thought actually that correction has finished here back in this was what 2019, but obviously later on this proved to be only as a wave X rally, and then we just moved sideways here. So it looks like this was then part of two corrections. So that was the first correction, potentially zigzag, you had a wave X, and now you have a new correction. This new correction could potentially maybe be even triangle here in this final part. So as I said earlier, could be a little bit challenging here, but even wave D here should be made by three waves, because even if we are trapped in some kind of a contracting triangle, we should see three subwaves. So looking down to the daily chart, notice that we have seen from that new low, actually that was a new low, okay, from that new low we have seen these 5 waves up, and then market just moved sideways. Okay, so we will see what will happen next, but I think that this could be potential correction and that we have a little bit of more upside before we may potentially find the resistance. But I really don't believe that euro will go far away from the pound. I just think that somehow euro and pound will obviously move very similar versus the US dollar, and we know that euro pound quote comes from the calculations of euro and pound versus the US dollar. Okay, so I think that this pair could still be a little bit challenging, but if we rally towards 0.9, I think that that's potential next resistance. Looking at the 4-hour chart, here, if we really maybe we are in this wave B, then the support obviously should be seen around the lower side of this contracting range. But even if we break this lower side, I still think that wave B could be the case, but just more complex. So the first support 88, the second support is 87. So for now it's still sideways. So if you're a more midterm trader, maybe these two levels that I highlighted could be important. If you're more short term, then obviously I suggest for this wave B to be seen visible on the charts and completed by the next intraday impulsive reaction higher from the lower side of this range. Okay. Now let's take a look also very quickly on German DAX. Yuan, I believe that you're in our chat room. I will look at the EURUSD there. Okay. Now let's take a look on German DAX. So German DAX, I've been looking and calling for this bullish impulse. I was tracking it for a while from that low, okay? And since we have these 5 waves up, I was aware of this reversal, and so far it's a very aggressive one. We are breaking this trend line. You can see here correction if broken. So I think that we are stepping into this corrective mode. We know that this can take us back into area for former wave 4, but this 5th wave was quite big compared to the wave 1, so maybe we will not see a retest of the former wave, the termination point of wave 4, which was around 13,700. Maybe the first support could already be at 14,600, but the whole this zone actually could be very interesting if the drop or when the drop from the highs will be in 3 waves. Okay, but for now it's still only the first leg from the high, so I think that more weakness will be seen. Looking here at let me update this. Okay, now this you can clearly see it's a very aggressive sell-off. So here I'm trying to count wave 1, wave 2, extended wave 3 to the downside, maybe even wave 3 or 3 still in the cards, and this could be now maybe a minor consolidation here. So no matter how I look at it, I just think that the next potential rally will be just temporary, and that we will see more weakness here, okay, after the next bounce. First resistance, when looking here at the previous swing, broken swings, is at 15,100, a little bit higher. Then you have this one from 15,260. Okay. Okay, traders, that's it. 45 minutes webinar is done. So if you're like our analysis webinar, please subscribe to our YouTube channel, follow us on TradingView, make sure to click the like button or leave us a commentary, and in that way you will support us, and I will make sure to do more of those analysis and webinars in the future. Okay, so be careful. Trading this week could be very volatile. Make sure if you are looking for any trades that you trade very small. If you're not confident with the market, just wait on the markets to calm down a little bit, to stabilize, and then when things will calm down, market will still be there for you. Okay, traders, good luck. Bye.